inflation has been broadly cooling, increasing hopes of interest rate cuts in the US and Canada. Our guest is a strategist in the US and Canadian equity markets, and he says we are headed towards a so-called Goldilocks economic scenario. Usually that means inflation is suppressed, but growth is decent. And he thinks the stars are aligning for cyclicals. We're joined by Ohsung Kwon from Bank of America Global Research. Thanks very much for coming on the show.
Thanks for having me today.
Before we get into your thesis about cyclicals and inflation, just give us your thoughts on this weakness in tech stocks we've seen over the past week or so. What do you think is driving it?
Yeah, it's really being driven by a traditional rotation into more beaten down stocks in the beginning of a new macro cycle. I mean, I think there are really three reasons why we think cyclical should outperform going forward. Number one is because rate pressure is easing, and a lot of cyclical stocks have been pressured by higher rates over the past 2 years. Number two, I think growth rate, the growth in the economy is ultimately going to be supported by the Fed. I mean, so far, this hiking cycle, the Fed was in a very difficult position with high inflation. Growth was still pretty strong, but when inflation is still out there, it's very difficult for the Fed to focus on two mandates. Mm-hmm. But when inflation is coming down and in check, then the sole focus of the Fed becomes growth. And I think growth will ultimately be supported by the Fed. And number three, and I think this is the most important one, is that earnings are broadening out. The other 493, so excluding the Max 7, their earnings are expected to be coming out of an earnings recession for the first time since Q4 of 22. And I think that will really be the catalyst for the rotation to take place.
What do you mean by an earnings recession?
Yeah, so the other 493 were posting negative EPS growth since Q4 of 22. And this quarter, Q2 of 24, will be the first quarter where those other 493 post higher earnings growth on a year-over-year basis.
You reckon that cyclical stocks, ones that generally do well when the economy is strong, are a buy right now?
Yeah, I think so. I mean, the economy has been strong, at least in the U.S., over the past 2 years. We are seeing some slowdown happening. We don't think we are falling off the cliff. We are simply moderating to trend levels of growth. And this is exactly what the Fed wanted. This is exactly what the bulls wanted heading into this year. This is the path to Goldilocks. This is the path to soft landing, and we're getting that. And I think the good news is that growth and inflation are back in sync now. They're moving together. So over the past 2 years, we have seen a big divergence between the two. In 2022, we saw an inflation shock. Inflation surprised to the upside when macro was okay. Last year, we saw immaculate disinflation, and obviously, we all know what the equity market did during the period. We saw inflation missing to the downside, whereas macro surprised to the upside. This year, both are missing to the downside, and there are some concerns out there that growth is slowing too much. We're not seeing signs that growth is slowing too much. It's just simply normalizing, and ultimately, the Fed is going to be there to support growth.
I'm interested here, Ohsung. This is a commentary you put out. It was a couple of days ago, 3 days ago, or you guys put out, saying travel remains solid despite capacity issues. So you reckon that demand is okay, but there may be just too many aircraft in the air?
That's what the airlines have so far said. There's not much issues on the demand side, but it was really capacity issues that are pressuring their pricing power. But I mean, it's a very industry-specific issue that I don't think there's that much macro read-through from that. The good news is that people are traveling. People are still spending money. The consumer is very strong. They're spending on services. And I think that that's going to keep the growth rate pretty strong going forward.
And finally, you'd like to bust a myth for us. You think that there's a myth out there that falling inflation is bad for earnings per share growth. So explain. I mean, it sounds to me that inflation is great for company profits. You jack up your prices. I know your inputs are going up, but disinflation is not a problem here?
Yeah, I don't think so. I mean, there are concerns that the disinflation that we are seeing is going to put pressure on companies' margins and companies' pricing power. Historically speaking, though, there's no statistical significance between inflation and earnings. Obviously, there's a very strong correlation between inflation and sales, but because of cost pressure and things like that, there's not that much. I mean, the correlation between inflation and earnings have historically been zero. So there's no correlation at all, and our analysis suggests that inflation has simply been a lagging indicator of an earnings cycle. It's really all about demand. It's really demand that drives operating leverage and margins, and I think that in the second half of the year, we could potentially see demand inflection on the manufacturing and the goods side of the economy rather than services.
What about the fact that, just finally, people are worried about huge government deficits in Washington, but of course the deficit's been huge for decades. Do you think that's an overhang on the economy? Will governments be forced to cut spending, do you think?
So the trend is basically that the government is going to continue to increase deficit, at least for the foreseeable future. Mm-hmm. Both parties, both candidates in the U.S. are pro-cyclical, and they are both likely to expand deficit going forward. The good news for the market is that historically, rising deficit levels have actually been a tailwind to the economy and the equity market, because the government is essentially spending the money to the economy. So it's actually positive for earnings and positive for the market.